Uh, Hello, comrades, learners. Welcome to today's session. We want to send our discussion today in Financial Accounting 1 under the ledgers. We want to look under double entry rule, but the subtopic will be the ledgers. The ledgers. So we want to look into the ledgers. That is our subtopic today. How the double entry rule is being applied in the ledgers. How the double entry rule is being applied in the ledgers. The ledgers. Good. The ledgers. The ledgers. Good. Now, the term ledgers is just simply means the ledger is simply means the accounts. It simply means the accounts. Means the accounts. Simply means the accounts. We want to learn more of opening the accounts in the business. So by this, I know we are going to now be able to open the accounts and also be able to balance and also be able to come up even with the trial balance. Now, for those who are new to the channel, for you to be up to date with the videos that I'm going to be uploading, just make sure that you subscribe. Subscribe so that you get a notification in any discussion you are going to conduct. You'll be able to get when we upload the video. That is the first thing I always encourage you, because we are here to assist one another in our academic journey. Good. Now, for those maybe you are new, also I can remind you, in the YouTube channel, just search Mr. M.Patrick. In that channel, you will find more videos in regards to the units we have been discussing in the course of the week, and now today being the week 6. Good. Now, as I've mentioned, let's look into the more into the ledgers. And the ledgers is, I've said, simply means the accounts. Simply means the accounts. Now, under ledgers, the double entry rules are how it is being treated in the account. It will always, you have to know, as you are going to look into these accounts, know that each transaction has got two effects. As you are going to open these accounts in the business, maybe a business has purchased a certain asset and all that, but know that the double entry rule states that every transaction has got two effects. Every transaction has got two effects. Yes, every transaction has got two effects. Which effects are this? Am I talking about? Is either in that transaction you are going to do what? You are either going to gain. You are either going to gain or you are going to lose something. Maybe you'll gain money. You'll gain maybe an asset, or you'll have a loss of maybe after you gain an asset. Maybe you purchase an asset. You will use maybe money, cash in the bank. Automatically that cash will reduce, or if you'll have to pay it, maybe you'll lose. Yeah. So when we are talking that, let's say for example, maybe you want to this marker pen of mine. Let's say I want to buy this pen, marker pen. After this one I'm using it has ended. Now what will I do? Meaning I will have to buy this using a cash in hand. Yeah. So when I buy cash in hand, the two effects there, when let's say e.g. when I buy, let's say when I buy a pen. Yeah. When I buy a pen, the two things are using cash in hand. Yeah. When I buy cash in hand, I will have two accounts that have the two effects here. We have cash, that is, and then I will have what we call that pen. Yeah. So those are the two effects. One, cash. I will open now the cash account or the cash ledger, the what we want to look into today. and I will open the pen account. Pen account. You see? Meaning, I said that every transaction, the transaction here was that I bought a pen, or I buy a pen cash, using cash in hand. Maybe let's say cash in hand 50 shillings. 50 shillings. Cash in hand 50 shillings. Meaning there are two effects. One, we buy a pen, meaning we increase pens on my hand. So meaning the pens have increased. But the cash in hand, I had 50 shillings. They have gone. So I've lost, there is a loss in, maybe in cash in hand. The cash in hand has reduced. So that's why we say it has got two effects. You either gain, you gain the pen, or you'll gain you'll gain the asset. But now, well, before we look into these accounts, opening the accounts and all that, we have to learn which accounts are we going to meet as we are moving forward. Which accounts are we going to meet? That is the thing I want you to understand first before we venture deeply into the discussion. We have to know which transaction are we going to meet. Which transaction? Now, these accounts have been divided, or ledgers have been divided into two types. So I can write here now account. Account is divided into two types. We have personal account and we have impersonal account. We have personal account. We have personal account. And we have impersonal account. Impersonal account. Yeah? When I talk about the impersonal account, here we are going to be opening accounts for the debtors, or you can call them trade receivable. The debtors, yeah, we are going to open the debtors. Another name for the debtor, you can refer to him trade receivable. Make sure you know this, trade receivable. And also, we'll be opening accounts for the creditors. Creditors. Creditors, another name for the creditors, you can refer to them as trade payables. Trade payables. So these are the people we are going to be opening accounts for them in regards to ledgers. So we'll be opening trade receivable or under personal account, and also we'll be interacting with the creditors who are trade payables. And now, under impersonal account, it will be divided into two. Also, we are going to have what we call the real account. Yeah, we are going to have the real account and nominal account. Real account, and nominal account. We are going to have a real account and nominal account under impersonal account. What about these accounts? What is all about? We are going to interact under real accounts. Here we are going to look into tangible properties. We are going to look into tangible properties. Yeah? When I say tangible properties, I mean maybe the fixed asset, things that you can see, things that you can touch. Yeah? Those are the real accounts. We are going to have motor vehicle account, fixtures account, like this one, pen account. I can see, I can touch the pen, I can feel it. Yeah? That is what we are going to look into here. Yeah? That is all about the fixed asset and all that. Yes? Then you're under that, so that is under real accounts, things that we can see and so. Then under nominal accounts, we are going to look into maybe the income and expenditure. Income and expenditure. They have no physical existence. Here they have got physical existence. Yeah? Here they have got physical existence. But here, it doesn't have physical existence. And I've given the examples. I've said, example we are going to have here is what we call what? Is what we call the tangible assets, or the non-current assets, or the assets. Yeah? Assets. Then here we are going to look into the expenditures, yeah, and incomes. So we'll have something like maybe rent account, yeah. We'll be having something called maybe you'll have a wages account, salaries account. It will fall when you open that account. Just know back in your mind that is called a nominal account. That is a nominal account. Good. Now, so for that, before we get into a practical example, of coming up with the accounts, I will suggest you to have this acronym that is going to help you. This acronym, if you have it in your mind, after you open the accounts or the ledgers and balance them well, you'll also be able to come up with what we call the trial balance. And if you have this acronym that I'm going to give you here, I assure you, my fellow comrades, that you will not have hard time in opening the accounts and even balancing. And the acronym reads dealer. The acronym reads dealer. Dealer. I think this I've been mentioning in our discussions, and I believe all of us, we know this. Dealer. Yeah? Dealer. So I want you to have this. Dealer. Now, dealer, what does those stands for? Those acronym. Yeah? So I can call this one element here. Element. Let me call that element. Then let me call what that element, which balance. When they balance, they will have which balance. Then, when those balance, what about if they increase? If they increase, what will happen? And what about if they decrease? They decrease. So these are things that you have to have this acronym. This formula I'm going to give you here. It is going to be helpful for us in regards opening the accounts or ledgers. Yeah? Opening the accounts or ledgers. Good. Now, D stands for drawings. D stands for drawings. D stands for drawings. Then E stands for the expenditure. D stands for the expenses or expenditure, or can call it expenses. Yeah. The ones I've been mentioning here now. I'm now trying to put it in this to make things easier for you. Then A will stand for the assets. The assets which I've been talking about under in personal accounts. And also the assets, we have debtors. They are under assets, current assets. Then we'll have liabilities. L will stand for the liabilities. Liabilities. Then E will stand for equity. Another name for equity is what? Capital. Capital. Then the last one will have revenue. Revenue. Under nominal account. Revenue. Revenue. Good. Revenue. Any income. Yeah, in the business. We are want to see, because we are going to interact with these expenses. Now, when we'll be opening these accounts, we will be required at the end of the day to balance. How do we balance? Because I know we are going to do a practical, but let's say I have this transaction we did the first one here. Like here we said we bought a pen, a cash in hand worth 50 shillings. So automatically cash in hand has done what? Has reduced. Cash in hand has reduced. So I will write here pen 50 shillings. So meaning this side is I always say this side is called payment side, and this side will call receiving side. So the payment side you record on the CR side, and this is the DR side. So under pen being an asset, it increases in the business. We are going to see how we are going to interpret here. When it increases, automatically you will do what? You will debit. You will debit your account. So you buy, say pen I bought with cash in hand, 50 shillings. So after you have done that, you are required to balance those accounts. You are required to balance those accounts. So when we will say these three will have a debit balance. Debit balance. What do we mean when we say they will have a debit balance? Yeah? We mean it will have a debit balance like pen account. It has got a debit balance. Why? Because the amount on the DR side, is higher compared to this side. So you can see we have 50 here, but here we have nil. So this account automatically it's a debit balance. Why? We'll have to put here 50 shillings, and I want to balance. I'll put there 50 shillings. 50 shillings here. Then for these two accounts to balance, DR side and CR side to balance, I will have to borrow the other side and call that one balance carried down of 50 shillings. Meaning now it has balance. And to complete my balancing, I will come now where my account balance and say balance brought down. The balance brought down is this balance carried down. So 50 shillings. That way you have balanced your account. You have balanced your account. So when we say it has got a debit balance, it means one either credit side has got the high amount or debit side has got high amount. What about the liabilities, equity, and revenue? When we will be opening the accounts, liabilities, equity, and revenue, they will have a credit balance. They will have a credit balance. They will have a credit balance. Meaning, like cash account here, this one, in case there was no any other account, yeah, when we are going forward, you'll realize the liabilities, equity, revenue in most organizations, they will always have a credit balance, meaning they have high amount on the DR side compared to the CR side. Good. What about now when we are increasing asset in the business, or when we increase expenses, or when we increase their drawings? When they increase these three, when they increase, you will debit. So in any transaction we are going to engage in, if there is an increase in an asset, let's say we bought more furniture or we bought a motor vehicle, that is an asset. So it increases on our side. So when we are opening that account or that ledger, we are going to debit. That account. Now, what about these three? The liabilities, equity, and revenue. Yeah? When they increase, what we normally do, we will do what? We are going to credit. So if you have this dealer formula, this dealer acronym, it's going to be of helpful to you in this ledger's opening and even balancing and trial balance. Now, we will also have when case they decrease. What about if they decrease? If they decrease, automatically we will do what now? We will credit. We are going to credit the account. Then this, if they do that, if they decrease, we will debit. I think now we are good to go. So that is what the guideline. That was just an introduction. And I believe we can understand this better when we do what? When we open the accounts. But make sure this will stick in our minds. So we will keep referring to this, yeah, from time to time. Good. Now, let's now do a practical example just for few transactions, like 5 transactions in the business. Then we do what? We wrap up that session and go to another session. Good. So let's look into now an example. Type example question that we want to look into, that will be able to lead us to open various accounts in the business. Good. So the question will come like in this form. That you are to enter the following transaction. Completing the double entry in the books, in the books or the ledgers for the month of May, or in the month of May 2025. The month of May 2025. So the first transaction, that is 2025. 2025 May. The first on first, we have been told, the question reads, you are to enter the following transactions, completing the double entry in the books / ledgers for the month of May 2025. First May started a business with. Started a business with 2,000 shillings. The 2,000 shillings in the bank. Good. Started a business with the 2,000 in the bank. Good. So we'll see how we treat that one. Then another one, we are being told purchased goods on 2nd May. Purchased goods. Kenyan shillings. Purchased good are shillings 500. On credit from Patrick. Good. So we'll see that on credit from Patrick. Bought furniture. Bought furniture on 3rd. Bought furniture shillings 1,000. Bought furniture shillings 1,000. 1,000 paying by check. Paid rent on 4th. We paid rent. Paid rent by cash. Paid rent by cash. 1,500 Kenya shillings 1,500. Good. Then another one, the proprietor took cash for himself. What? The proprietor took cash for himself. Shilling 500, 600. I mean, took 600 for himself. Good. So we have been told to open up to enter the following transaction. So that is the transaction in that the month of May. You have to enter the following transaction, completing the double entry in the books or ledgers for the month of May 2025. So I will reach there. Good. So I think we have now knowledge where I started from now. And I have back in mind that every transaction has got two effects. Now, let's start the first one. So in every transaction, we are going to open an account. Yeah? Either two accounts. Yeah, depending on that question. Because in double entry rule, we'll have two effects. Either we gain or we lose. Now, so we proceed. Started a business with 2,000. Started a business with 2,000. You see? When we start a business, we start with what? That is the question you have to ask yourself. When you start a business, automatically you'll have capital. You need capital to start the business. And that the initial the capital you start it at first stage, we call it initial capital. So then this capital was in the bank. Now, so you'll have two accounts. In this one, we'll have two accounts. The capital account. So solution now, we'll have capital account. Yeah, draw that. It is in the T format. Then we'll have what? Bank account, because we started this amount being in the bank account, being in the bank. What if they said he started a business with 2,000 cash in hand? We could have opened two accounts, the capital account and cash account. Now, it's just a matter of now posting. Let us post now in that ledgers, those ledgers. So, when you start, let me give you a hint here. If you want to understand this, start with that account that you know, you understand it well in regards to how the dealer directs you. Let's say you know very well the bank is an asset, current asset. And you know asset, when the under dealer, when asset increases, you debit. And when asset decreases, you credit. Now, if you know that, for me, I always focus with that account that I'm very much sure that when I do the posting, I will not fail. So, automatically when I do this, I know that like bank, because we started with the amount in the bank, meaning the bank increased. Yeah? If their bank was 0, and we have started a business, we have deposited into it 2,000, automatically that bank account has increased. And regards to dealer, if you refer to the dealer, says that when asset increases, we debit. So I will come and write, this is the DR side, this CR side. I will come and record here capital. The amount that was in the bank was capital. Amount 2,000. 2,000. That way, have posted well in the bank account. Now, what about the corresponding account, the other account? Now, the moment I've debited here, I always know under the double entry rule is either I will gain and the other one it will lose, and vice versa. So meaning, when you gain here, automatically, if you debit here this account, this another account you will credit. You will credit. So I will come and credit here capital that was in the bank, 2,000. This is just an hint. But in case you are using the dealer, if you look under capital, equity, equity says when equity increase, yeah, can you check? When equity increase, you do what? You credit. So just check equity, the last three. When equity increases, you credit. So that's why you are saying you are crediting. But in case you forgot that dealer, just know that the moment you realize one account, how you can treat it, the moment you know that this account you have debited, the other one you will credit. There's no way you will debit this account and come and debit this account. No, that big X. If you debit this account, the other account you will do what? You will credit. I think the point is home. Let's go to the next one. Purchased goods worth 500 on credit from Patrick. How many accounts are there? Purchased goods. When you hear the word purchased good, you open an account called purchases. Purchases account. You write here purchases account. When you just hear purchased good, purchases account. Purchased goods. If they have not mentioned, like you can see in the third, they have mentioned purchased furniture. You'll open a furniture account. But if they have just say purchased goods, open the account called purchases account. On credit. Yeah? On credit from. If they could have stopped there on credit, I could have just opened creditors account. But if they have mentioned the creditor, who is now Patrick, I will open Patrick account. I think you're understanding that. Patrick account. So meaning, if they could have not mentioned Patrick, I could have just opened account there, creditors account. So that maybe I will get another one. He bought maybe now, he bought bought maybe another, maybe let's say he bought stock on credit. Without mentioning the creditor, you just record under creditors. But if they have mentioned the creditor, the name of the creditor, you open in specific that person. You can open the specific that person. But still, you can also group them under one called creditors, but it's wise for you to open the relevant creditors account if they have mentioned their names. Now, so what is happening? I will pick that account that I know that I can tackle well. Like purchases, I know these are assets. These are stock. Yeah. Now, when I open the goods, the purchase, when the goods increase on my end, I do what? I will debit automatically. I will debit. So I will come here and write debit because they are increasing on my end. I will debit. I will debit and write here Patrick. I bought from Patrick on credit. How much? 1,000. You see? Then automatically if I credited purchases under Patrick account, I will do what? I will credit and write here purchases. You remember to start with the date. Write a date and write purchases. How much? 1,000. That is it. Good. So we proceed. So even if you look under dealer, the purchases is under assets. When they increase, you do what? You debit. And look under creditors. Creditors, when they do what? When the creditors increase, or the liabilities, let me call the liabilities. Creditors is under liability. We have long-term liability and we have short-term liability, the current liability. So the current liability, creditors are under current liability. And we say another name for creditors are trade payables. Trade payables. So when they increase, you do what? You record on the CR side or credit side. Think I'm done. We go to the third one. Bought furniture. Bought furniture. Okay. The first one was 500. Sorry. 500. And there 500. Good. So we go to the third one. Bought furniture 1,000, paying by check. So they have mentioned now what they have bought. So we are not going to open purchases account. We are going to open furniture account because they have mentioned for us. Furniture account. They have mentioned for us. Yeah. Furniture account. But we are paying by what? Check. So meaning we have to open bank account, and already we have bank account. So I will not open another account. So I will just do the posting in the bank account. Now I will choose the account that I understand more, and for me I understand the asset more. So the bank, when I bought with the check, meaning the bank reduced, the amount in the bank reduced, and when the assets reduce, I will always do what? I credit. So I will come and write here furniture. Then how much? 1,000. That way, I bought 1,000 from the bank and bought furniture. And under furniture, because furniture is an asset, they increase. So I will do what? When they increase, I will debit. So I'll come and debit here and say I bought what? From bank. The furniture was bought from the amount from bank. From bank, how much? 1,000. Full stop. And that is how the postings. That is postings. And you are good to go. Now let's go to the next one. Paid rent by cash. Paid rent by cash. Paid rent by cash. Good. So we have two accounts there. We paid rent. One, they have mentioned what you paid. Yes. So you'll open what you call rent account. Rent account. They have mentioned what you paid. Rent account. If they have mentioned rent account, then you'll have to open what now? The cash account. We don't have cash account currently, so we'll open cash account. Now, I will go with that account that I understand. For me, I understand cash account well. So cash account, I paid rent by cash, meaning the amount from the cash in hand reduced. So when the cash asset reduced, I do what? I'll credit. So I will come and write here rent under cash account, my cash in hand. How much? 1,500. But under rent, if I've credited this account, meaning under rent, I will do what? I will debit. Under rent, I will debit and say cash. I paid by cash 1,500. Even without using this analogy, I will go with the dealer. Dealer says expenses. That it is among the three. Dealer, expenses. Expenses, when they increase, you do what? You debit. You debit. Good. So we go to the next one. The proprietor took cash for himself. The proprietor took cash for himself. Good. That is now give us what? They will give us which account? The proprietor took cash or cash account because he took from cash account, yes, and cash account and what? Cash account and drawings account. So you'll have to open drawing because when you take something from the business, it's called what? Drawings. Drawings. Good. Even if you are operating business and you are in business serious, you'll treat it drawing. And if you are operating under the concepts called business entity concept. Business entity concept says that you have to treat business as a separate entity from your own dealings. So meaning if you take something from the business, you have to treat it as drawings. That's why it is. You can see our transaction here says the proprietor took cash for himself for 600 so that we can account for it in our account. We can account for it. So we'll open an account called what? Drawing account. Yeah. Meaning we can now account. But if you don't account for this, now you are cheating yourself. The profit that you'll get at the end of the year is not real. It's not real. So that is the drawing account. Now, when you took cash from business, meaning the cash reduced, so you'll come and write here drawings. Drawings, how much? You took 600. Then when drawings is on, that's an expense. When they increase, you do what? You will credit, you will debit. So you'll come and put here cash in form, you do a drawings in form of cash, 600. And you are good to go. You are good to go. So these are just few transactions to help us to understand this part of posting and balancing. Now, when you have done the posting, well, you go to what we call now balancing. That is now you have to get what I was talking about, debit balance and credit balance. Now, let's start balancing the first one. Capital. As I mentioned to you in the dealer's formula, that capital or the equity will always have a credit balance, meaning the amount on the credit side will be higher. But because these amounts have not indicated all of them, some you might see they are differing. But if you have the complete month, you realize mostly the dealer will affect your transaction the way it says. But let's see. The capital obvious will have a debit credit balance. So you can see we have 2,000 here. So I will have to put here balance carried down of 2,000 so that I can balance the both side, so that we can have at this side 2,000. So when I do maybe totaling here, I can have here 2,000. I can have here 2,000. Then you double underline. You double underline. That is how it is being done. But you haven't finished. You have to report back that when in case you go to the month of June, you can come with a balance brought down of 2,000. So you are good to go. That way, you have balanced your account. You have balanced your account. The bank account, the same. You come to bank account. Bank account says that assets must be having a debit balance. You can see we have the amount. So it means we have to. This is that way. So if that's one, we have to put here 2,000. Yeah. Then here we have to put 2,000. So to make this 2,000 on this side, because you can see we have 1,000 here, we have to borrow. You get the totals on this side. You subtract from this. 1,000 subtract from 2,000. We get 1,000. So it becomes balance carried down of 1,000 here. So that when I add this 2,000, 2,000. Then you come and say balance brought down of 1,000 here. That way. Purchases, the same. Purchases 500. You will have to put here now balance carried down of 500. So that in case you do your totalings, you can have here 500, here 500. Yeah. So that you can come and have balance brought down of 500. Good. Just simple. Good. So the other accounts you can just balance for yourself and you are good to go. You can just balance for yourself. Now allow me to touch on something on trial balance. On trial balance. Trial balance, you'll have it this way. The trial balance, it looks this way. The trial balance as at maybe 31st of that month. The trial balance will have it also have a debit side and a credit side. So the trial balance will look that way. It has got the DR side and CR side. And this will be for particulars. Now, I want you to understand something. If you have dealer, let me assure you, if you have dealer formula, and you have balanced your account well, it is easier for you. So, under trial balance, you will just come with what? With the balance brought down. Yeah, starting with the capital. You will come now, after you have balanced your account, you know which account has got a debit balance, credit balance. So if account has got a credit balance, when you come on the trial balance, you write your capital and put it where? And put it under. If it has got a credit balance, like this one, capital has credit balance, and the balance brought down is 2,000. I'll put here 2,000. This 2,000 is balance brought down. Good. We go to the bank. Make sure bank has got a debit balance, meaning on the trial balance, we are going to put it under DR side. So I'll put here bank, and put here balance brought down of 1,000. Don't make a mistake of taking the 2,000 under the DR side for the bank. Come with the balance brought down. Now you go to the purchases. Purchases the same. You write purchases. Yes. Purchases. You'll have a DR side because it has a balance. It has got a debit balance. So the DR side balance brought down of 500. If let's say in case we were to balance the drawings, here we'll have balance brought down, carry down of 600. So that one balance with that way. So the balance brought down of 600. So the drawings, you'll come here. It has got a debit balance. Yes. Drawings has got a debit balance. So if you do that, you'll have to put here now the balance brought down was 600. Good. So let me mention something. After you have done this for the whole month, the balances down there must be balancing. At the end of the day, they have to balance. But because this was just an example, we haven't finished everything. Make sure that you balance everything. The question I will say in the group, so that you can balance everything in regards to that, and make sure that you come with the balance brought down in the trial balance, and you do what? You balance. Make sure you balance. You'll get a question here. The reason why we prepare the trial balance. One, to prepare to avoid to see if there was an error that was made while we were posting. Yeah, to see if there was an error that we were made while we were posting. There are several other reasons, like 3 to 4. You can also check on that so that you'll be aware of it. There's a question on the same. You can have a question. You give the reason why you prepare trial balance. Then you'll be asked that you come up with the ledgers, post them, and balance them well, 20 marks. So you see, you can secure all the marks. So that is good for today. I think now, in case you get a question in regards to ledgers or the accounts, you can post them well, and you know which accounts are those, and you'll be able also to come up even with the trial balance just in case, and you'll be good to go. Now, let me mention something. Under trial balance, you will also get a question. You can see this question, maybe they want you to balance, and then you come up with the trial balance. But you'll get another question. They have extracted balances already. They have already extracted balances for you. The drawings, discount allowed, discount received. They have extracted balances, purchases, assets, all the assets, bank, they have extracted balances for you. So if they have listed down here the balances, yeah, if they have listed the balances, like maybe bank, they give you. The drawings, they give you. Then creditors, maybe they give you. Mention them. and they will always put it to DR side, CR side. They put it here, or the other one, you'll see they have given you maybe motor vehicle, they put it here. They give you maybe discount allowed and discount received. Discount received the same time. They can put the amount here and amount there. So it's up to you to know which is an income and which is an expense. Yeah? Because discount allowed is an expense. So you know very well if it is an expense, it will have it will have a credit, it will have a debit balance. So you'll pick this amount here on the DR side. For that one means for the discount allowed. So when you come with the discount allowed and trial balance, you'll put it on that amount, you'll put it on the DR side. But if you don't know how to interpret this and you don't have the knowledge of the dealer, you'll get it a problem. So make sure you master the dealer and you try the question that they have now already extracted the balances. They are just there. It's just for you to look into that list and you put it here. Look into the list, put it here. But if you have the dealer, you're good to go. So that is it. So for today, I think I've covered well that part of the ledgers. Just make sure that you have subscribed to the channel so that we can continue learning together. And don't miss the weekly discussions. And if you are not aware of the weekly discussion, kindly hit in the comment section so that we'll guide you on how you can link up with us so that we be together in every weekly session we normally conduct. So for today, bye-bye, and may God do you good.